Hey folks, Dan Frio here with you, your market update. Yes, I'm wearing a different shirt today. It is not black or white. My wife said the same thing. So we have great news out today, kind of, sort of, and I'm going to get to that at the end of the video, so stay tuned. But we had inflation numbers come in today, and they were out of whack. They were completely out of whack. They were the highest in 40 years. But you always can't judge a book by its cover, and we'll explain that here in a minute. But also on the recession front, I think Kathy Woods just got herself into maybe a little bit of trouble because she went on CNBC on Tuesday, pre the market knowing about GDP, and said we're in a recession. Well, CNBC really doesn't like to say we're in a recession, but Kathy Woods came out and said it, so maybe she'll get banned. Who knows? And then the next piece of this puzzle, based on today's information, we're going to go over interest rates. But I got a little bit of a tidbit here to show you because it's intriguing. Because in most recessions, what happens is mortgage rates drop about 1 full percent. Well, I think mortgage rates are going to show that we're in a recession. So let's get to it. The first thing I want to go over with you guys is here's mortgage rates, but we're going to get to that in a second, is inflation. So the big number that came out today is the inflation figure that the Federal Reserve watches closely hit the highest level in over 40 years. Yes, 40 years. But guys, let's not judge this book by its cover. Let's figure out, or let's dig a little deeper into these numbers. Well, if you really dig in, you don't have to go far. There's something called the core PCE. What they do is they look at this number, but they pull out the inflation figures for food and energy. And I know food and energy is a big part of our budget, but they do that because it's so volatile. Okay, the reason why I want to pull this out is if you exclude that from the number, we're at 4.8%. Okay, not as high or as crazy as a lot of the headlines read. But if you go into that a little deeper, the biggest components of this is right here. If you're watching Sesame Street, you'd look at this and say, okay, if there's one of these pictures just don't fit, which one is it? Well, it's right here. So the biggest culprit we have right now is energy. I'm going to say oil. So our federal government has a lot to do with this, and I wish they would dive in and try to help fix this a little bit more and not be dependent on foreign oil and other oil. But I'm not trying to get political. I just want to vent my piece of the puzzle here. But if we go to the next piece of the puzzle, we look at where oil prices are going, and it's up 4% or 3.5% just today. So you can see this is very volatile, and we really need to do something about this. You or I can't do anything about it, and we sure as heck shouldn't rely on OPEC for all of our oil. That's my rant for the day. The next piece of the puzzle is we have Wall Street darling Kathy Woods. She came out on Tuesday, yes, Tuesday before the GDP announcement, and says we're in a recession. Okay, so she probably got flack from a lot of CNBC analysts and maybe even some people on Wall Street, but she's the darling of Wall Street that everybody's following her right now. So if she says it, there's a lot of other people that's going to follow suit. So based on that, what other economic calendar events are happening right now? So let's dig into this. Really, the only thing for today is the PCE. So we don't have to really be fret on that. But the other piece of this puzzle I want to look at here is we saw the GDP number come in yesterday at negative 0.9. But we also have initial jobless claims. Everybody keeps continuing to say the jobless market or the jobs market is crazy, crazy good. Well, did you realize that over the last week, there's 250,000 people that filed for their first time unemployment? Okay, 250,000. It's a lot of people, just saying. Okay, so now let's get to my surprise of the day. I just said what happens during a recession is normally mortgage rates come down. And on the average 6 recessions, we saw mortgage rates go down between 1 and 1.5%. You know, I looked at this several months ago and I'm like, well, it can't be, we'd be negative. Well, then mortgage rates spiked from like 3 to 6. Okay, so let's look at those numbers briefly. So what I have here is what I post every day. This is Mortgage News Daily. They post out rates, and here's what these rates are compared to. They survey mortgage lenders all over the country. So this is a blend of the biggest mortgage companies out there. And they said, hey, if you had a client that was buying a $500,000 home with a 740 credit score, 20% down, it was a single family home and going to be their primary residency, what would your rate be? So everybody replies, and here's their replies. There's the 6 biggest mortgage products out there, and they post rates for every one of these products. But what I want you to focus in on is right here, okay? I don't want to figure on the number, anything right here. I just want you to go down through these 2 numbers right down here. What these 2 numbers represent is the 52-week high and low, okay? Look at the high, 6.28%. Okay, we're going to round that to 6.25. Let's go over here, and we rounded this number. What would it be? 5.25. And the difference is, you guessed it, 1 full percent. Well, what did I just say about a recession? In normal recessions, the last 6 recessions that we've had, we saw mortgage rates decline by 1 to 1.5%. Just saying. So if you're on the fence of looking to buy, might be a good time to buy. If you're already pre-approved, I'd love to see what you've been pre-approved for or with, and what rate it is and how much that would cost you, and I'll give you all my information down below, and I'll explain this at the end. So that's what's going on with mortgage rates. So let's see, based on this chart, I also follow this, and this is my ticker into where mortgage rates are. This is the MBS market, and I explain this in detail on most of my videos. This cell right here, or this component right here, this is a bond that trades on Wall Street. This is the price of that bond. Why do we watch this bond? Well, it's a mortgage-backed security bond. It's the bond that sells on Wall Street that is packed with mortgages. The yield on this thing is basically the biggest component of your mortgage rate, okay? So we follow this number to watch what's happening with the price of the bond. So this is how this works. This is what's happening to the price of a bond. So let me make it simple for you. As the price goes down, like in this case, mortgage rates go up. There's a flip-flop, what they call an inverse relationship. So when this is down, rates are up. When this is up, rates are down. Look at the chart down below. You can see that for the past week or so, we've come off a bottom, and we've come off a bottom pretty strong. And you can see also by mortgage rates that we're 1% lower, and we didn't hit this high mark not long ago. I'm saying probably about 30 to 60 days ago. So mortgage rates have dropped full percent over the last 60 days. Put this into context. If you're out there and you're looking for a mortgage, this is my promo section, so bear with me. I want to explain to you guys what I do. I'm actually a mortgage broker. I'm federally chartered, which is really odd because most mortgage brokers are just state approved or whatever else. I actually hold a federal charter, meaning we can do loans all over the country. So I don't care if you're in California, Iowa, Texas, Arizona, Indiana, we would love to help you. Okay, so the biggest piece of the component that we resolve for people is if you're in your mortgage process right now, you're probably confused. Okay, because it is a pretty complex situation, and mortgage rates change every day. You can see just in the last 60 days, we probably saw mortgage rates go down 1 full percent. So I ask you to do this. If you're in the mortgage process right now, and you got a loan estimate. That's if you put in an application within 3 business days, by federal law, your mortgage company has to send you what's called a loan estimate. That loan estimate is a 3-page document. It might come in a whole big package, but it's going to go over vital information in regards to your loan, and it can help me possibly get you better terms. So that loan estimate gives you this. It gives you your name, the address, the property value, and then it starts going through the nitty-gritty. It tells us what your loan amount is, the interest rate, if it's locked or not, and then how much it cost you to get that rate. Okay, so what I do is if you would send me your loan estimate, I'll go into my database, and I have over 120 lenders live that I'll put in all your information, and then it'll come back and give me a list of every lender that I'm set up with, and it's over 120 of the biggest lenders in the country, and it'll tell me what their rates are. So now we can compare what you're getting with what if there's a better offer out there. In most cases, I'm going to do this. You come back with much better terms than I can get you from 120 different places. I'm going to go back and say, God bless you, kudos. You did fantastic. What normally happens is this. You get it in, and I'm going to call you back and say, hey, I can get your rate at 0.5% lower than what you're paying now, and their costs are $5,000. Mine's $895. What do you want to do? That's what happens normally. So to find out more about me and my team, all I need you to do is go to therateupdate.com. Here it is, and you can find all my information down below. So that's it for today, guys. Thank you so much for watching. Thanks for making this channel a success. God bless. Have a great weekend. I'll see you Monday. Bye-bye.